Hey everybody, welcome back to the channel. It is July 4th, 2023, so happy July 4th to those that celebrate it. The older I get, the more I realize that the only reason I have the freedoms to do the things that I want to do, to build a business, to start anything new in America, is because America has given me those freedoms, and there's a lot of countries around the world where you don't have those freedoms as easily. So I'm a proud American. I'm becoming an even more proud American as I grow older, and I'm just becoming a lot more thankful given what I'm seeing across the world, that no matter how much America has gotten wrong, and it's gotten plenty of stuff wrong, it's gotten a lot of stuff right as well. And very grateful to be an American on today, July 4th, 2023. Now, in today's video, we're going to talk about insider selling. And this caught my eye yesterday. Someone tweeted it to me, and I was just like, that's really interesting. The original VC and founder of Snowflake sold 500,000 shares at $177. So he sold 4,000 on June 29th, all the way till June 30th, 28,000, 103,000, 194,000, 183,000, 86,000 shares, averaging in at about $177 per share, reducing his stake from 2 million shares to 1.5 million shares, pocketing $88.8 million. Now, why did that get my attention? The real reason it got my attention is because over the weekend I had a call with someone who is using Foundry in their business, and it's a public company. It's a big software tech company, and they're one of the kind of chief data guys that is responsible for like approving the sale and distribution and ultimately implementation of a product like Foundry. And it was a really interesting call because he walked me through all of the use cases for why they even adopted Palantir, and like why he's a shareholder of Palantir after using the software in his company and like implementing it and seeing how transformational it is, and sort of what his experience has been like using the software. And so while I was on the call with him, we had about an hour-long call. It was a great call. I asked him, what do you think about Snowflake? And he told me the same conventional answer that a lot of data people have told me over the past couple of years, which is that Snowflake and Palantir can't really be compared because they do different things. Snowflake has 8,000 clients. They're growing like crazy because, you know, anyone can download them and start paying $20 a month, and then boom, you know, you're hooked up on Snowflake. Whereas Palantir, they got to consult with you. They got to implement it. The software is not as easy to just like immediately put in. There's a lot more stuff you have to do when we're talking about a company like Palantir. So I asked them then, what do you think about it from an investments perspective? And that's when he was just like, I don't understand, after using Palantir Foundry and having that software fundamentally transform the architecture and nature of our business, why anyone would be paying $57 billion for Snowflake. And that's, you know, where the market cap is right now. You're paying $57 billion. You're paying double what you're paying for Palantir when you're getting a Snowflake. And so the question becomes, what is Snowflake? And at the end of the day, he told me it's just a data storage center. Like it's a data warehouse. I mean, like, yeah, there's a lot of stuff you can do, and we'll talk about all the generative AI stuff they're trying to do, but that's all it is at the end of the day. And granted, I don't mean to say this in an arrogant way, or that like they're not a big company, they're not being used. Frank Slootman's not an amazing CEO, all that stuff. Like, I get it, right? It's a good software company. It's a great software company, but it trades at 25 times price to sale. It trades at a very hefty premium at $56 billion, and stock-based compensation increased by 53% in Q1 2023. Palantir is no stranger to stock-based compensation, but we're decreasing 27.5% year over year, where stock-based compensation for Snowflake is increasing. You don't want to see that happen as a company is trying to become more leaner and profitable. You want to see them reduce the amount of stock-based compensation they're paying, because ultimately stock-based compensation is diluting shareholders. And Palantir at one point had 70% of the revenues be stock-based compensation back in 2020, but that has declined, and it's declined precipitously because the company recognized that like we can't keep getting away with this, and we have to ultimately do what's right for our shareholders. Whereas Snowflake's, it's increasing. 70% of sales and 70% of revenue is spent on sales and marketing. So when I was talking to this guy, he was basically saying, look, Snowflake is a very valuable product and it's useful, but in terms of transforming an entire business from an end-to-end on a data side, it's doing little other than storing the data, and you can have built some apps on top of it, but it's not what Foundry is. It is not that operating system. And for people to willingly decide to pay $57 billion for that company, for a share of that stock, versus $30 billion for Palantir, which even you could argue that is a little bit overvalued, it's quite interesting. It's quite surprising. So the CEO, or the former founding VC and the VC and founder of the company, selling 90 million of stock at this valuation, to me, you know, the reason it's interesting is because it's not 10 million, it's not 20, it's not 30, it's not 40, it's not 5 million, it's not 50 million, it's $90 million. Like, when someone sells $90 million of a company, they're signaling something to the market, which is, yes, he's had those shares for a while. Does he deserve to take them off the table? 100%. And I'm not here counting your pockets. Go ahead, do what you need to do. But $90 million worth of taking it off the table means either you think the company is pretty overvalued right now, or you think the company's level of growth is not going to be what people think it is. By the way, they reduced their guidance for growth in their last earnings. Or you think it's just a great time to take money off the table because there's people on Wall Street willing to buy and pay $57 billion for Snowflake. And you're like, that's a hell of a deal because I got in when it was like, $5 billion or whatever. And therefore, I'm going to cash out. Ultimately, I don't think it's a great sign for Snowflake shareholders to see someone take off $90 million off the table. Does it completely destroy the stock or affect the stock dramatically? No, but it is worth comparing. A lot of people talk about Palantir's insider selling, which we're about to talk about in a second. I haven't seen anyone cash out $90 million worth of stock in Palantir, right? Now, I haven't seen them buy a lot of stock, which I definitely wish they would be buying a little bit more, but I haven't seen them cash out that much. And when a founding VC and founder decides to cash out that much of the company 3 years after they're being public, I think it says a little bit about what's going on in the company. Alex Karp, this is his ownership shares. He previously had 85 million shares in 2021. He now has 64 million. So he decreased his shares by 25%, and his ownership percentage is now 3.3% of the entire company. Now, remind you, 2021, this is when his lockup period expired. He was in the company for 20 years, right? So I imagine someone who's, there for 20 years, they're going to take some off the table, especially because the market was just giving absolutely ridiculous prices. And to be honest, he offloaded at a great time because the company, the stock was at $100 billion market cap and barely doing $1 billion in revenue, right? So it made a lot of sense. Since then, Karp has only sold once for just out of the market. And it was 325,000 shares at $15.04, pocketing $5 million, right? So that was the last time that Alex Karp actually sold into the market. Every other time he has been has sold has been for an options reason, right? So you have to pay shares to cover the taxes for the options that are vesting. Those are the only other times that Karp has sold. So this was the first time we saw him just directly sell shares into the market. And 325,000 at the end of the day is just not that crazy in my opinion, given how many shares he has versus 500,000 shares out of 1.5 million. Karp is selling 325,000 out of 64 million, right? So obviously it's a very, very small percentage of his stake. And it's not something to be that concerned over. Now, as you can see, all we have are sales, right? So we have some option awards right here. We have a bunch of option awards coming here. We have a bunch of different conversions here, but we have a lot of sells. Couple of reasons for it, and then I'm going to play a video that I never got to post a while ago when Shyam Sankar sold like 50,000 shares. And I'm just going to let that clip play on the Palantir Weekly podcast because I never got to play it. I never got to upload it as a video, so it'll be the last thing on this video. I think the difference between a lot of what's going on with Palantir is that a lot of the people that are selling either are inconsequential, meaning they're like the CFO, they're selling 50,000 shares, 100,000 shares. It's just not that big of a deal. It's not a lot in terms of their overall equity stake and ownership stake, or they're founders, right? So Shyam Sankar, Thiel hasn't sold in I think like almost 2 years, and Karp. And they have so many shares that they have vested to them. So that when people are like, oh, why don't you buy shares in the open market? Their argument is like, well, we're getting a ton of shares from our options, so we don't really need to buy shares. Whereas someone like Anthony Noto, he's not a founder of Snowflake, of SoFi. So he needs to signal to the market when things go bad, hey, I'm in it, I have my conviction, I'm buying these shares, and then boom, he throws in $100,000, buys 50,000 shares, whatever. He has to buy his shares and he has to maintain that conviction. He has to show to the public that he cares. Whereas Palantir, these guys are in it for the long run because they've been in it for 20 years. They're founders of the company. Shyam Sankar was one of the first 4 deployed engineers. Thank you to Chris for giving me that information. I actually didn't know that. And they've gotten a lot of options that will vest over time, which will be very valuable. So the idea that they need to take their actual cash in the open market and buy it at $5, $6, $7, would I like to see it? Sure. Would it be a nice sign of confidence? Sure. But at the end of the day, I think it would be virtue signaling, right? It would be kind of like, hey, look at me, because they don't need to do that because they have so many options that vest already that putting that money into the market, like, it just wouldn't make any sense. They already have a significant amount of shares. Usually do that when you want to get your ownership percentage even higher because the stock is so undervalued, but these guys own so much of the company. I mean, Karp owns 3% of the damn company. That's a lot of shares at the end of the day for a company that you've owned for the company that you founded 20 years ago. So I don't think the insider selling by Palantir has been insane. Would I like to see some more buying? Yes, that would be awesome. Karp selling 300,000 shares out of 64 million after he's had it for 20 years, and this is the first sell he's made since 2021 and the only sell outside of options vesting. I just don't think it's that big of a deal. Shyam has sold a little bit more here and there. I think Shyam's like trying to buy a house or something. That's my hypothesis, because he sells 50,000 here, 50,000 there. And I'm like, all right, you're selling 50,000 at $8. You're making 400 grand, and you got to pay what is like probably half of that in taxes, so you'd pocket $200,000. Like, do you got to do a down payment on a pool or something like? It's very, it's interesting his sells. But at the end of the day, you can't pick anyone's pockets, right? People are doing what they have to do, and same thing for the Snowflake guy. I'm not. Look, the guy could sell what he has to sell, to make your money. $90 million is $90 million. It's just, I think for shareholders that are like, oh, $57 billion is a great deal for this company and Palantir is not. I'm like, well, wait a second. The original founder just took off 25% of his stake, $90 million off the table at $57 billion. The company's trading at 25 times price of sales. And here's the kicker, and then we'll get into the Shyam Sankar selling clip from the weekly podcast. I don't know what Snowflake's generative AI motives. They just acquired a company for $150 million. They did some partnership with NVIDIA saying, hey, we're going to bring generative AI applications into the enterprise marketplace. They have to figure out the acquisition. They have to build the technology. They have to do the partnership with NVIDIA. They have to then sell to their clients. Yes, they have massive distribution, but you have to actually sell something that works. That's not just a PowerPoint, that actually has reasonable value, that can transform your business. Palantir's already doing all of that. Palantir's already getting inbound demand. Palantir already hosted an entire conference. Palantir already built and developed a product 2 months after ChatGPT was out. And now it's a question of if Palantir can scale their customer count and really begin to capture the entire market, which is what Alex Karp said. Our strategy is to take the whole market. That's what you're paying $30 billion for at this valuation versus $57 billion for a company that is essentially a data warehouse with a ton of clients. 53% stock-based compensation increase, 70% of revenue is sales and marketing. So a lot of that stock-based compensation is going to salespeople. It's not going to engineers building revolutionary products. And they're just trying to figure out their generative AI moat. I mean, to me, it's like, it's hard to justify that in any type of way. So yeah, this is going to be the clip that I never uploaded from like a month ago about Shyam Sankar selling. And I think it'll add some diverse perspectives to why he's selling and overall what it means to sell a stock. So thank you guys for watching and enjoy this last clip. All right, we got to get into some news that's not that good, and I honestly don't know how to feel about it. Want to know your guys' thoughts, so let's bring it up and see what you guys have to say. CTO Palantir Shyam Sankar sold $15 million worth of stock as part of a 10b5-1 plan. He converted B shares into A shares and then sold them at $15 a share. This transaction is part of a related series of transactions. The reporting person converted 791,000 shares of B to A, then sold the resulting shares of Class A, along with 240,000 additional shares of Class A, and this is all legal under the 10B rule. And he sold them at $15 a pop. I don't know. Bearish, not a concern. Shyam doesn't have enough faith. Anyone have any thoughts on this one? Arnie, you want to go?
We have been discussing insider selling for quite a long time, and we have seen that insiders sell basically regardless of the stock price, because basically it was even Shyam who sold a big chunk at the bottom, him along with other insiders. So is insiders necessarily a bad thing? Not necessarily. Obviously, is not nice to see, and I think this is one of those things that don't really impact negatively. It's just okay, I would have preferred this not to be out, especially because it's not just a one-off event, it's a sort of recurring. But on the other side, I understand Shyam. He has been invested de facto for 20 years in one company, and he's also scared, maybe. He's also scared of, maybe he has some plans, and he's scared of, okay, now the stock goes back to 6. Imagine how much difference it could make when it comes to not 100 shares, but these thousands of shares. So overall, not worried. It's just not nice to see. What I can say, if just to be the lion, the keyboard lion, doesn't excite me to think he's selling Palantir for DNA, which is a company that never inspired me. So if I want to criticize, I can criticize that. Because
he's on the board of DNA and he bought 400,000 shares recently.
Correct. He's on the board of that company, and I haven't studied the company well. I can just say it is that kind of company that looks a little bit shady for me. I just have bad vibes, because rather than being a company that say something and actually really show execution on that front, like Appcelera, you see they have a similar business model, but you have actual proof that their business case actually worked. And it was just enough one molecule with COVID to prove, okay, the business model works. It is just incredibly early, but the company has the cash there, even without all the COVID stuff, it is sustainable. So having the direct comparison with Upsellera, my bad feelings toward DNA are sort of validated. But again, I don't know the company. Maybe he's inside the board. He knows something really exceptional is coming out. So I hope him, obviously, the best of luck. It's just something I don't fully understand.
Yeah, I would agree with that. I mean, I don't know Sham's personal finances. I don't know what's going on in his life, right? Like he's worked at this company for God knows how many years. He has an opportunity to take some profits off the board. Yeah, would we like him to buy some shares? Of course. Maybe he goes and buys them when they're cheaper. I mean, this stock did just run up over 123% in like less than 30 days. So I wouldn't sweat it too much. I wouldn't get too. I think sometimes we get too worried about the insider movement within companies. I think it's harder to tell signs when people sell shares. I think it's easier to have tells when they buy shares. That's more indicative to actual something that tells me something.
Okay, Matt, any thoughts on this? Or we can move on.
Yeah, I mean, if you just look at the transaction history, he gets paid a pretty significant amount. He's the CTO, right, which is top of the house. Executives get paid a lot of their money and share compensation. You'd actually probably be surprised at how low the salaries are. You'd anticipate salaries for some of these executives to be tens of 20s of millions of dollars. In reality, it's probably in the several hundreds of thousands, maybe $1 million range. And the majority of their compensation truly comes from the stock ownership piece, right? The share-based compensation. And I see that within my own organization, an undisclosed oil company. And I see that in many other organizations as well, where the first year that person gets into office in the executive suite, like, man, they only made, $1 million. You'd expect them to get more. And next thing you know, they're getting 10 million, 15 million, 20 million. And it's all based off of what kind of milestones you meet. When you are on their executive board, you have to meet all these, that's who's basically coming up with their pay compensation, right?
Sorry, Matt. I'm just checking. Shyam Sankar made $700K in total compensation as a chief operating officer in 2021. So actually, it fits perfectly in line with what you are saying. We're not talking about already tens of millions in terms of salary. It is true that the biggest part of their compensation is in stock in order to make them move, because the harsh reality is that if you are paid too much in cash, then you're fine. But if you are paid in stocks, you are heavily incentivized to actually create value. Otherwise, those stocks will not move.
Yeah. So, I mean, what we don't know, right, and just like you guys don't know, is how many RSUs, restricted stock units, are in the pipeline that Sham's going to receive, right? This is just what we've seen he's getting this quarter. He could have millions of shares more coming down the pipeline that you guys don't necessarily know about. And he's sitting there being like, crap, 70% of my net worth is going to be in Palantir stock. If I'm looking ahead 3-4 years from now, I'm pretty confident that those things are going to meet, those metrics are going to meet. So I'm going to be getting another couple million shares of Palantir in the coming quarters. It's probably prudent for me to take some money off the table. And he still has over 1 million shares of Palantir. So here you are sitting here trying to point the finger, and here he has still $15 million worth of shares and probably millions of more on the way in the coming years. So, I know for a fact that when I get some of my RSUs, I sell them because I like to diversify my portfolio. 100% of my income, if I'm not working on YouTube or anything like that, comes from the company I work for. So to get shares in that company as part of my compensation as well, I like to diversify it out. As much as it pays a decent dividend, it's just prudent of me to do. If I lose my job tomorrow, I lost, hundreds of thousands of dollars of income a year. And here I could have been diversifying whatever stock I had, and you never know, just from a standpoint of, say there is some sort of black sheep event and Palantir doesn't go the right way, he's diversifying into something like DNA or something of the like, right? And he could be trying to see, he could be doing exactly what Peter Thiel did, right? Investing in Facebook back in the day, and he could be trying to do what Chamath Palihapitiya had been doing, taking some money out of Facebook and investing in other companies as well. So it's not unusual that you see this happening. And I think anybody that's sitting there pointing the finger is really just trying to feed their own agenda and egos. And they really need to think about, once again, it's personal finance.
I want to bring up some comments from Sachin. He says the guidance of year-end revenue is 2.3 to 2.37 billion. Let's round it up to 2.5, which means the current forward price to sales for year-end is 12 to 13. For any company to exceed the mark of 15 of price to sales is not easy unless you are Snowflake, which is why he also says, I don't think we will see any fast leg ups until something really bullish happens. We should consolidate here in this range of 13 to 16 for a while, which makes sense in the context of Sham, because if theoretically, if we would consolidate in this range, then this other comment that Sachin has, which is executives will always sell when they are dumping hard and with shaky news around, is the shady part. So if it's consolidating at 13 to 16 for the next 5, 6, 7 months and Sham sold at 15, I mean, it's not that big of a deal. If some news comes out tomorrow where, you know, the sky is falling and everything, all hell is breaking loose, and now he's selling 2 weeks before, like Silicon Valley Bank, then you're like, all right, what did I invest in? What's going on, right?